good afternoon. You're watching Closing Trades on ET now, and the mood of the market is completely turned from what it was at the start of the trading session to now. It's a sea of green across the board, and the kind of big move that we have seen and the recovery that we have seen. Nifty, of course, almost 300 point off the lowest point of the trading session, and even Bank Nifty for that matter, it's recovered almost 800 to 850 point from the day's low, and that's the kind of smart recovery that the market has staged at the moment. India VIX, however, that continues to be quite elevated. It's come off from the highest level, but still it's up around 11-12% and it's surged to a level closer to 21. So we are tracking what's happening there. In terms of individual names, there are losers and heavyweights at that. So Tata Motors is of course reacting to its earnings and the weak guidance. So that stock is down a solid 8-9%, hasn't recovered much from lows of the day. Reliance Industries continue to reel under pressure just around that 2800 mark. And Bharti Airtel ahead of its earnings tomorrow is in focus, a bit of a red on that one as well. What's aiding the sentiment today? Some of those large private banking names, so HDFC Bank as well as ICICI Bank. These are two big gainers which are actually supporting the sentiment. But overall, I think it's the market mood that has changed quite a bit. Call it the uncertainty that the people have with respect to the political agenda or other worries regarding earnings. They seem to be abated for now.
For now, yes, for sure. But let's see how sustainable and durable this is and whether it continues into tomorrow or is it just a near-term fill-up that one is seeing. But yeah, lots of earnings reactions. While Tata Motors is getting thrashed out on one end, the gap down hasn't been able to see any signs of a recovery, and especially the JLR guidance is what has really hampered the sentiment on the street. So Tata Motors continues to languish, still down about over 8% as we speak right now, but that's not quite the case with ABB. Irrespective of the right valuations that the stock, or for that matter the entire sector quotes at, ABB is on an uptick of 10% even right now as we speak, and has held on to that gain. It's an above scorecard on all counts, be it revenue, EBITDA, margins, or for that matter profitability. UPL also came out with its numbers just a short while back, and the numbers, it's really been a turnaround quarter, and I think there is a one-off component. But more than that, it's the commentary that the street is lacking on UPL. The fact that what their target is for debt reduction, the EBITDA growth that they foresee, all of that is something that the street is liking. Sirma SGS, we spoke with the management as well earlier today. They as well have delivered on expected lines, and that stock also holding out. But let's welcome on board our experts. It's been quite a volatile day. Yes, we've recovered, but let's find out how durable this is looking. Kunal, Naresh, as well as Daljit Singh Kohli on the show with us. Kunal, what do you suspect is the durability of this rebound that one has seen today?
Well, very difficult to say it on a single day basis, but I think if we get the evidence over the next couple of days that the market sustains this 22,000 odd, on the Nifty and 47K approximately on the Bank Nifty, I think we could be now, looking at a major bottom formation. So, there are two parts of this market rally. One, of course, is that the Nifty and the Bank Nifty, both of them have managed to come back to their previous major trendline swing lows or supports for themselves. It was around 47,200 for the Bank Nifty and 22,000, 21,900 for the Nifty, 21,800 approximately for the Nifty. We managed to test both these levels for the indices, went a bit lower, but then I think on closing basis, we should be able to defend these critical supports. Now, on the other hand, even though the India VIX is rising up higher, but I believe that what could now, what is very important to see now going forward is that if there is no incremental rise in the India VIX, and if we say even if we hover around the 2021 mark, say for the next 2 or 3 days, there could be a stronger chance of recovery from the market perspective as well as from the indices perspective. So I would probably believe that the next couple of days holds a lot of significance, and if we hold on to these key support levels and the lows for today for both the indices, stronger chance of recovery.
Chance of recovery. But Naresh, the indication seems to be that the Bank Nifty is much stronger than Nifty right now. Is that the view that holds on the technicals as well?
So in the near term, we had a larger fall in the Bank Nifty, and overall over the period of time, Bank Nifty has been a major underperformer. So out there, yes, today it is relatively doing better, but looks better as well, because majority of the components of Bank Nifty are back to the same prices. So the largest is HDFC Bank, Kotak. They've done nothing for a long time. So expecting Bank Nifty to lead from here, the bounces is coming from a very important price point for both Nifty as well as the Bank Nifty. So 21,700, 800 was a major support for the Nifty. Similarly, 47,000 was for the Bank Nifty, and we get a bounce back from those levels. That indicates a short-term bottom is in place. And now once we have this recovery, a strict stop loss at today's low becomes an interesting trade to keep buying on dips. So expecting this bounce back to continue towards 22,400 to 24,500 also possible.
Daljit, hi, afternoon. What is it that you're making of this acutely volatile nature of the markets nowadays? Best to lighten positions ahead of the June 4th event?
Good afternoon, Aisha. See, we as in long-term investors, I think best thing for us to do is not to do anything. That's not doing anything is also an activity in the market. Why? Because we believe that this kind of turmoil is only because of this major political event, which is due now in next few days. And probably for the traders, it may be of relevance because every day they will keep on taking calls on how many seats are coming, who is not coming, what is happening. For us as long-term investors and to see, which will see a long-term durability of policy action, I think we are not expecting anything changing there. Our view is very clear that whether majority margin of victory, whatever it may be, but ultimately if the current dispensation continues and the policy continuity remains, then there is nothing to worry. Then we have all the growth aspects in line, and whatever was the earlier contention of India doing very well for next 2 years, 3 years, 5 years, all that remains. So there is no change. So even if there is because of this volatility, because of this margin of victory changing here and there could be a turmoil for a few days and then it will come back. So we are going with that view, and therefore, as a disclosure also, we are not doing anything in our portfolio. We're just sitting tight, looking at day-to-day gyrations of the market.
Good strategy. Don't do anything. Just sit tight on the portfolio, and perhaps just patience is going to pay out quite well for you. But the other one on our radar today is UPL. The numbers were just out in the matter of last 1 hour. It was a big beat versus expectation, and the numbers will come up for you shortly. The revenue profile of 14,000 crores was much better than our expectation of just 12,000 odd crores. The margin has come in at 13.7%. And going forward, the company is guiding for 4 to 8% growth in revenue, which sounds fairly modest. But I think it's the EBITDA growth which is expected to be almost over 50%, and the fact that the cash flow generation is going to be strong, those numbers for you on the screen, that's the big talking point right now. Daljit, over the course of last 3 to 4 trading sessions, we've already seen UPL move up almost 15 to 20%. What would you do now for UPL and the rest of the chemicals pack as well, if you have a view?
So instead of talking on UPL, I'll talk about agrochemical sector. I think in last few interactions we had discussed about it, that we were preempting this kind of recovery in the agrochemical sector, and we were of the view that probably the worst is behind for this sector. If it is not fully behind, maybe next one more quarter, things will turn around. So we have seen some other few other smaller companies also coming out with numbers. They have also shown sequentially there is a good change. Of course, YOY there will still be negative numbers because the base was much bigger. But the point is that there is a very clear signs of recovery happening in the sector, and we feel that maybe in next 1 or 2 quarters, this issue of China dumping too many goods at very low prices, that problem will get over. Demand will also revive, and in the view that the domestic market also will revive because of the expectation of good monsoon. After El Nino, if La Nina comes, then that normally results in very good monsoon, and that leads to good demand for all these agri chemicals. So we are positive on this. Some of these stocks we are holding in our portfolio. Our disclosure, of course, UPL we are not holding, and we don't talk stock specific. But on the sector, we were preempting this turnaround to happen. I think there are some green shoots of that.
Okay, in fact, we had a whole host of managements as well chat with us today, from Sirma SGS to Sapphire Foods, which has been under pressure on the back of its earnings, and of course, Polycab as well, along with Dr. Lal. So let's hear out a slice of the management interactions from all of these.
Going forward in the coming year, we would be in a better position where we are guiding a growth of about 40-45%, same as per last year, and EBITDA margins to stabilize at about 7%. In the coming year, FY25, I expect my consumer business to be below 40% of my revenue. Currently, it is 40%. Automotive would be about 21%, industrial about 25%. Healthcare would constitute 8% of the high sort of top line growth. So it would be led by, as it has been in the past, by industrial, auto, and consumer.
So soft demand conditions and heightened competition is what makes this quarter also a little constrained. I think we might see this for perhaps another 1 or 2 quarters, and then we will see an improvement in overall demand conditions. That revenue should grow in the region of 25%. EBITDA should grow in the region of 30%. You'll have quarters and years when it might be a little up and down, but I think that's the longer term aspiration undoubtedly.
I think the overall competition scenario, some bit of the maybe irrational pricing that was seen intermittently has subsided a bit. So we've been consistently saying that, our EBITDA margin level would be around what we even see, in our delivery in Q4 in the range of 26, 27% kind of EBITDA margins. I think that's something which we continue to state is something which we are working towards.
Now pickup is done in the Q4 of this year. And now this coming 3-4 quarters is going to continuously grow. And we are looking very positive in that because range we increase and we have seen that what is the really demand in the market. We understood everything from last 3-4 quarters and now we are on the right place.
We are confident of our profitability. As you would have noticed, we had almost 10% of PAT margins. We believe we have a sustainable 12 to 13% EBITDA margin and will continue to maintain that in the quarters and years to come.
AB Capital, that's the healthy number currently on your screens. Their total AUMs have seen an uptick of 21%. PAT, and including the minority interest and excluding the one-off item, that's seen an uptick of a solid 33%. 812 crore rupees is what they've delivered this time around. The revenue as well has seen a growth of about 32%, and I guess that is what the street is liking right now, which is why that spike up after the numbers that came by. The health insurance business also has turned profitable on a sequential basis. So clearly the nitty-gritty is not just the operational numbers, but that also seems pretty healthy for AB Capital. Kunal, you've liked some of these stocks in the past as well, right? What do you see on the charts now?
Yeah, I think it's still looking very attractive. In fact, in this last phase of correction, in the last 10 odd days, the stock had come back towards from 245 to 50 levels to almost 210 to 15 odd marks. So that was a good retracement for a stock like AB Capital. And in the last couple of days, the stock was showing a lot of strength and resilience. So, if, for example, on Friday, the stock closed on a positive note, and today the stock opened with a strong follow through, did not manage to break below the Thursday and the Friday swing lows as compared to the indices as well as for many of the mid cap peers. So I think that itself is a sign of strength for the stock. I would believe that now we could be on course of coming back to that 240 to 45 mark, possibly in the next 2 to 3 weeks.
Okay, point taken. The two pockets which are making news right now is, of course, industrials, with the earnings coming in from ABB. Both ABB and Siemens are actually higher, anywhere between 7 to 10%, actually 7 to 11 now. And on the other hand, the auto companies are coming under pressure, especially Tata Motors, with the kind of miss that we have seen in the margin of JLR this time around. And going forward as well, the outlook is not very healthy. Daljit, from these two pockets, autos as well as industrials, what would be your recommendation? Should one still buy afresh into industrials and prune positions in automobiles?
No. So in fact, in automobiles, we are quite positive. We don't play OEMs directly because by nature, they are all large companies and mega cap kind of companies. So they don't fit into our theme of mid and small cap. We play that auto theme through various ancillaries. And normally we choose ancillaries which are present in 5-6 subsegments so that it remains diversified. It is not overly exposed to any one segment, either two-wheeler or four-wheeler or engines like ICE engine or electric engine. It should be across the various segments. So those kind of ancillaries, we have exposure to 3 of them. And we are positive on the entire sector also. So as the OEMs do well, these ancillaries will also do well. On the capital goods, again, the same thing. We don't own these large names because, again, they are all highly overvalued as well as big large caps. So we again have to look for something which is a smaller company or mid-sized company and which is in the similar field. So we are again positive on mid-cap capital goods companies also. And we believe that Abhi capex cycle has not even started. So if once the industrial capex cycle starts, which everybody has been expecting for quite a few years now, let's hope that after these elections, like the big announcements of policy, etc., will come, and then probably we'll see some kind of revival in that industrial capex. That time, I think most of these smaller and mid-cap companies should also do well. So one has to choose these companies very specifically and play accordingly.
That's the take coming in on some of the capex themes names. But Naresh, what's your sense on Tata Motors, which of course has seen a sharp earnings reaction today? M&M ahead of its numbers is also a little somber, although it had a great last week and has had a great run as well. Would you say that autos may head in for a pause perhaps?
So some of the names could get into a pause. If you look at Tata Motors, it broke out at 400, 450 levels last year. The stock has gone up all the way to 1000 plus. So that's been a huge rally, and a correction of 10-15% from the top would be very normal. We saw that happening with Mahindra and Mahindra when it had the big rally in 2021. So out here, correcting at 900, 950, and that should be a zone of support where it should pause. Same is the case with something like a Bajaj Auto, which has done a lot, could consolidate. But something like Eicher Motors, which has just broken out a few weeks back, may not correct a similar manner. So that should be a buy on a dip, and it has not gone up in a major way. So the sector is extremely strong on longer term trends. In some of the cases, because the price moves have been very large over the last 3, 6, 12 months, consolidation and correction of 10-15% from the top would be okay. So one could be looking at switching from some of the names to something like Eicher Motors or Ashok Leyland on declines.
Okay, point taken. So that's a view coming in on some of the auto majors. But we did hear out the management when they spoke with the investors on the con call as well. Listen into a slice of that conversation with the Tata Motors management.
Currently, internal teams are working away in terms of drawing up the entire plan. And the next step that we need to do is to put up a scheme of arrangement which needs to be put up to the board for approval. I would expect in the next 1-2 months the scheme would get approved by the board, and thereafter I would expect maybe another 8-9 months for the NCLT process to complete. April next year we should try and get this concluded. Worst case slips to July. Yeah, we're about 55,000 units now. Sanam 2 started the operations. We're producing about 8,000, 10,000 in that site now. That will keep increasing. As the year progresses, I would expect to take the 65, we'll take it up to about 80,000 units.
Okay, let's focus in on Zomato. And while that may be headed a little bit weak into its numbers, but that is not what the expectation is surely from Zomato. I'm just going to bring up the poll as well for you. Maybe we can line up Vinny as well and try and highlight what the anticipation is from Zomato. Because we're expecting the food delivery business to actually see growth trends, and that it's going to continue, aided by, of course, the increase in the platform fee that they undertook in this particular quarter. We're expecting Blinkit's GOV to show a growth of nearly about 12% on a sequential basis. In fact, let me take it across to Vinny and find out what are the operational numbers that she's penciling in her poll.
So Zomato is expected to report its numbers. When you look at it in terms of numbers, revenue is expected to see a growth of 11%, profit a growth of around 38%, while in terms of the EBITDA, we're expecting a 37% growth and improvement in terms of the margins, a sharp improvement in terms of the EBITDA margins. This is all we're comparing on a sequential basis. Food delivery business, that's expected to see a strong growth. That strong growth has continued to trend upwards. Why? Platform fees, that's what they've taken a hike, and that is what will be supporting the growth of the food delivery business. So yes, sequentially, food AOV, that's the average order value, that could remain flattish, but other than that, we are expecting a good performance in the food business. We're expecting Blinkit's gross order value to show a growth of around 12% quarter-on-quarter basis. And let's not forget, they were talking about the EBITDA margins. When you are talking about the EBITDA level, a margin, they were expecting that to be on the positive side, achieve a break even over there as well by Q1 FY25. And analysts believe that maybe they could surprise the streets if that happens this time. So that's what we're keeping an an eye out on in terms of the commentary. Growth is expected both in Blinkit as well as Hyperpure business, strong growth over there. So let's keep an eye out on that. Will the company be taking any more platform fee hikes? That's something we'll watch out for in the commentary. And any update in terms of the trends that we're seeing, that's key factor to watch out for.
Okay, thanks, Minnie, for that. But time now to take the CT picks from our technical experts, closing trade ideas. Naresh, you go first.
That would be a buy on Tata Steel. The stock has seen a good recovery in the day from an important support zones wherein it had given a breakout about that 157 to 160 mark. Strong recovery, relative strength as well, and it's given a longer term breakout. 155 was the top back in 2021. So expecting this to continue towards 170 and cross into new highs.
Okay, point taken. So that's the closing trade idea coming in from Naresh. Kunal, what are you spotting on the charts?
So I'll go with Asian Paints, a stock which over the last 5 days has shown a very heightened amount of volatility from 3,000 to 2,700, and from 2,700 the stock has come back towards a 2,800, 2,850 level currently. So looks attractive at current stage and expecting the stock to have formed a major bottom for itself.
Okay, point taken. As we head into a break, take a look at the stock of CE Info Systems. I think in the last few minutes there has been quite a bit of perk up on that one. At least that's what's visible on my screen. CE Info System is the stock that will come up for you on the screen, and the other one is Hindustan Zinc. So not really showing on the charts there, but Hindustan Zinc, that's the other one. That's higher by almost 4 to 5%. Time now to slip into a very short break. Don't go anywhere. Welcome back. Well, the numbers for Zomato are out, and it looks like it's a sizable beat versus expectation. We were working with a profitability of almost 200 odd crores. At least the consolidated number that I was seeing were a little higher. Okay, so that's the adjusted number that you'll have to look for, because the profit for the period is 396. But if you look at the comprehensive income, that's the one I think we're flashing for you on the screen. That number at around 175 crore as per agencies versus ET now poll of 191. So that's why perhaps the stock is coming off a bit. I'll wait back for more details because clearly there's some adjustment in the numbers. But that's what we have for now. Of course, the platform fee, as Vinny was just highlighting to us, was something that the markets were watching out for, and that would have aided the earnings for sure. But I think the commentary from the management is going to be fairly important. What do they have to say about Blinkit? Because that is something that the street is now ascribing a bigger value to versus the food delivery business. So that's clearly something to watch out for. But in the meantime, Kunal, on the charts, if there is that dip that does happen the way it's visible on the screen, would you buy this stock now?
Yeah, I think I would probably believe closer to 185, 190 could be a good zone to buy the stock, because that would probably make the stock tap back into the previous key support points, and from where the stock has recovered twice over the last 1 month approximately. So I think the previous time when the stock had come back towards 185 mark was in the end of the previous month of April. And from there, the stock went up to 196, 197 approximately. Again, corrected towards 185, 188 kind of a territory. And then from there on, the stock had crossed back about the 200 levels on Friday. So I think that could be a very good point in case if the stock shows that kind of a dip.
Okay. The PAT has come in at 175, so that's a little sub what the ET Now poll was penciling in, because we were working with a figure of about 191 crore rupees. But the margins, that has seen a massive expansion. 2.41% is what they've reported this particular quarter versus a comparable of 1.55. The EBITDA, that's seen an uptick of a massive 68.6%. And the revenue as well has come in at 3,562 crore rupees. What is it that we were penciling in? We were expecting about 3,579. So while the PAT may be off, the margins as well as the top line has managed to beat the street estimates, or largely been in line. So it's a bit of a mixed bag. Let's see what the nitty-gritties are. I think what the street would want to know is what the Blinkit revenue specifically is, because that is what the street is penciling in to be the business for or rather be the revenue generator for Zomato. Also, we're expecting Blinkit's GOV to show a growth of about 12% on a sequential basis. Hyperpure, that's expected to see a growth of about 9 to 10%. So these are some of the numbers that we're going to be looking out for. We should flash the top line numbers and the margins as well shortly. But for now, okay, the quick commerce business, that has seen an uptick of about almost 19.5%. 769 crore rupees is what it's delivered. So that I would say is a beat, because we were expecting about an 18% uptick coming in. So, I mean, the numbers don't look all that bad eventually, while yes, the margins are not as per, I stand corrected here completely, because the margins on a consolidated basis have come in actually half of what the 18-hour poll was penciling in. We were expecting a bloated figure of 4.8. What they've delivered is actually much lower. Karan Tarani from Elara Capital joins us on the show right now. Karan, hi. Do you have the numbers or should I read them out to you?
Yeah, you can read the performance of segment wise, but yeah, broadly the numbers largely are a beat on the revenue front as far as what we are getting here. And in terms of EBITDA, our EBITDA margin estimate for consolidated company was around about 2% and we delivered about 2.4%. So yeah, we were lower versus consensus on profitability, and it's largely come small beat has come, basically that. Yeah.
Business, that's seen an uptick of roughly about 2.5%. Hyperpure, uptick of 10.71% on a sequential basis. 951 crore rupees is what they've delivered. Quick commerce business, that's delivered about 769 crore rupees, Karan.
So, yeah, sorry, the business of food and quick commerce, if you can just send me the growth or the EBITDA numbers, that will be helpful.
Yeah, just give me 1 second. I'm just waiting for that flash to come back on this screen.
Quick commerce EBIT is actually 2 crore rupees, which is a positive number versus the loss of 56 crore rupees, if I have that right. I don't know if it helps you or not, but that's the first number that we have. And the quick commerce revenue is 769 crore versus 644 crore, and the EBIT is a positive 2 crore number.
This is a positive, because I think quick commerce we're expecting almost about 670 crores on revenue. So yes, there is a beat of about 10-15% on quick commerce. So I think that is good. And of course, quick commerce has has done a break even this quarter. I think we are estimating that Q1 FY25 you'll see a break even in the quick commerce business. So it remains to be in line that the quick commerce business is seeing very good execution on take rates, on efficiency and profitability, and the business is operating at a reasonable amount of scale now. And basis that the break even and part to profitability is coming at a faster pace versus expectation, which is good news, of course.
Has the EBITDA margin fallen short of your expectation, Karan? Because that's definitely been a poor performance as opposed to what we were penciling in. The margins have come in at 2.41%.
Yes, as I said, our EBITDA margin expectation was about 2%. So it's come at a mild beat, and Street was, way higher on profitability. 2-3 reasons here. I think on the Blinkit side, there's been a mild positive surprise, in terms of break-even point, because we were expecting, some minimal losses for Blinkit this quarter as well. So that's one. But I think the food business margin, which is the larger chunk of the pie, those margins, would have not seen a Q1Q growth, or the other businesses like Hyperpure or other businesses would have made higher losses, and maybe that's the reason for the margins, kind of being on this versus consensus.
Let's see whether that's the reason or not. But the stock is actually down 5%. In fact, from the highs of the day, it's down 6%. Karan, do you expect a bit of a reversal given the fact the EBIT of the Q-commerce business has come in positive?
Yeah, so, the EBIT of the business has come positive. As I said, that is despite. But, the point I'm trying to make is that food business still has a significant contribution to the overall valuation. If you look at the valuation, almost about 65-70% of the company's valuation is driven by food business. So in case there is any negative surprise on the food business on profitability, because EBITDA as a percentage of GOV, we were expecting an improvement of about 25-30 bips on a Q1Q basis. And if you remember, they had hiked the platform fee about 2 or 3 times, over the last 3 to 6 months. And that is a lever, for improved margin. And despite of that, margins have not come high. So there could be some, problem on that front. And second, of course, is also the growth front, right? I mean, the food business would have seen a decline on a Q1Q basis, because last quarter was a very heavy base because of the World Cup and the festive season. So I think we'll have to wait in terms of, more operating performance of the food business to get more clarity on this. But yes, valuations were at a massive premium, and we recently upgraded Zomato to a target price of 250. But clearly on a near-term basis, we did not foresee too much of an upside. The 2-3 target price is more from medium-term standpoint because FY26, if you look at the numbers, I think the food business is already at about 55 times EV EBITDA, and even the Blinkit business is about 6-7 times EV sales. And after assigning all these premium valuations, you don't get a target price of more than 200 for the near term. So the valuations were at a premium, and if at all there has been any kind of a negative surprise or not a high growth performance, then obviously the stock could see some mild correction.
Valuations were pricing in the best already. Karan, thanks for quickly joining us. But to the point on the food delivery business, well, actually, it's still a growth on a Q-on-Q basis despite the heavy base. So the food delivery revenue has come in at 1,740 crores versus 1,704 crores in the quarter gone by. And even Hyperpure has actually jumped up by 11% on a Q-on-Q basis. We'll wait by and see what happened at the operating level in these two businesses and what explains this fall in the stock price. Maybe as he pointed out, it was just the fact that the stock had run up quite a bit. There was very limited room and the best was already priced in. So the company had to come out with a very stellar set of numbers to surprise the street versus the estimates which were already there. And also we'll wait by for the commentary. The Blinkit turnaround and other details is something that really one needs to watch out for. But the star performer in today's trading session has been ABB. That's been piling on more gains. It's up almost 11%. And the big question the street is asking there is about the sustainability on the margin front. Let's take it across to the conversation my colleague Soumit had with the management, Mr. Sanjeev Sharma, the country head as well as the managing director of ABB, as well TK Sridhar, Chief Financial Officer, were just speaking with him.
Well, ABB India reported a stellar quarter in the first quarter of calendar year 2024. The stock hit an intraday high after its profit beat analyst estimates by as much as 49%. To give more details on the factors that led to the stellar performance in the first quarter, we are joined by Sanjeev Sharma, the country head and managing director, and TK Sridhar, the chief financial officer of ABB India. So, sir, firstly, to start off with, in the first quarter, your margins shot up to nearly 18%. Now, this was because of execution of orders that had come in when the raw material prices were higher, and currently we had seen a decline in the raw material prices. But how much of this increase in margins that we have seen is sustainable going forward?
I take this question. Thank you for this question. I think if you look at today's the profitability of ABB in India for the Q1 24 results, is definitely the mix of orders, which is orders which have been booked and executed, booked at the time when the material costs were high, and we got a premium for that. And that's something which the material costs have now softened, so we are enjoying those benefits, number one. And number two is there was a huge element of service business which was executed in the Q1, especially the process automation segment. And that's something which also gave us a good bit of a profitability expansion in the Q1. And apart from that, needless to say that this is the first time which we crossed 3,000 crores in a quarter as a revenue. And that gave us an immense leverage on the capacity, which really helped us to post this particular profitability. Now, coming to your question, is this something which is sustainable? Is actually we are today riding on a backlog of 8,500 crores, which is almost 28% higher Y on Y. Right? And I think this has a good mix of orders, both projects as well as products. And we still have a book and bill which will come up during the balance quarters to come. So I think it also depends on what's the material cost which behaves in the future, and also how the market prices in the coming quarters behave. So according to me, right, what could really drive the profitability is a good mix of orders and an execution pattern which will follow in the next 2 to 3 quarters to come.
Okay, so suppose we assume that the raw material prices remain at current level, then is the margin 18% sustainable at least for the next couple of quarters?
I think as I told you, the order backlog which is there has a good share of projects businesses and some system businesses which will have his profitability very well set out, because that's an order which is not book and bill. And the book and bill orders, which is normally 40 to 50% of our every quarter's revenues, depend on the market prices prevailing at that point of time. So I think to my mind, it will get adjusted going forward and get calibrated to the current material cost conditions, what is there in the market.
So can we say this, that though margins might not sustain at 18% level, but the company would always aim to have a margin above the 2023 level of 14.3 odd percent? Is that the correct way to look at it?
Let me put it this way. I think last year we declared 12% as a profit after tax, and our aim is to be better than that, or at least be there at those levels, overcome what may.
Okay. Now, if you look at your order inflow, that was around 15% higher, both on sequential and on YOY basis in the first quarter. But in Q2, are you seeing signs of going forward? Are you expecting some slowdown owing to elections, and post-election, are you expecting a further pickup in order inflows to come in?
Would you like to take it?
Yes, typically, I think this is a question around elections, but in this particular election, we don't see a significant impact coming. There are some pockets wherein you will always have short cycle orders which get adjusted. But otherwise, on the broader frame, we see that the investments being made by the industries, infrastructure companies, as well as the orders being placed by the government, especially for railways and metros for us, I think we don't see any slowdown there.
Okay, so the strong momentum that ABB is talking about in here, is it specifically for the entire sector, or specifically for ABB, given that you're gaining market share from your peers?
Well, last 3 years, if you see 2021 to now performance, we have grown 27% CAGR on the orders. And also our margins have expanded about 700 basis points. So that shows that we are able to engage with the market and the multiple market segments which are of interest to us, and we are able to extract growth there. So I believe it is a mix of India story, wherein India is growing. Number two, market is much more broad-based compared to past. We participate in 23 market segments, and we are seeing robust growth in multiple market segments. And also we have increased penetration in geographies wherein we were not present before. And plus, on top of it, we have expansion of our product portfolio. That means more products and services are being offered to the market. Plus, on top of it, we do the localization, which continue to make our products more competitive in Indian market. So a combination effect that is playing out. And not to mention, post-COVID, there is a much more kind of a reliability aspect which has come into the mind of the customers. So companies like ABB, which really stood by all the customers during the COVID period, we supported them. There's a much more reliability factor also playing out in the market in terms of trusting what we can do for the customers.
So based on the above mentioned factors, can we confidently say that 15% growth that you achieved in first quarter is easily sustainable throughout the calendar year?
What we always look at is how the market formation is ahead of us. So that's what we focus on. We don't give any forward guidance. And what we look at is how the market formation is, all the segments which are interested to us, and also the how the geographical spread is taking place. So there, I think we have a good market formation, good project pipelines, and we will continue to engage with them, and you will get to see how we perform quarter to quarter going forward.
I think just to add to what Sanjeev was mentioning, Sumit, so if you look at it, today 92% of our business comes from India. So therefore, any economic activity which spurs the environment in India would definitely also come our way. So we believe that it's also important that the government capex and the private capex also play out a role in this growth journey.
Okay. And segment-wise, if you could just give us some information on from which segments are you seeing this large order inflow coming in?
Well, we have three categories of market segment wherein we call them focus, enhance, and sustain. So focus segments are, for example, are the ones which are growing 15% plus in the marketplace. So namely, it can be data centers, railways and metro, and electronics manufacturing. So that's where we are seeing large gains for us, more accelerated volumes for us. Enhance are the segment wherein the market segments are growing between 8 to 15%. And there are multiple market segments there, be it renewables, automotive, warehouse and logistics, water and wastewater, buildings and infrastructure, power distribution, food and beverage. And then there are classic large industry market segments, be it marine and ports, rubber and plastic, metals, mining, oil and gas. They are sub 10% growth, but many of those large market segments are now joining in their capex journey, and that is something which has to play out as we go forward.
Okay. How much does data segment currently contribute to your top line, and going forward, how do you see the share of data centers to increase given the fact that players are literally doubling their investment in this segment?
Data centers, I think this is a journey which has just started, wherein major players are localizing their data center capacity. So I think it's a long way for us to capture this market. In the sense there will be accelerated investment, and we are seeing accelerated investments there. And
Okay, so let's welcome on board Devang Mehta as well and chat about what he's making of the market right now. Devang, hi, afternoon. Apologies to keep you waiting. Just got a lot of earnings coming in back to back. But I don't know if you've taken a look at Zomato numbers, because, the commentary from the management is pretty strong, both on the turnaround for Blinkit as well as Hyperpure and the kind of, addition they see to their business, or for that matter, the debt reduction as well. But yes, the margins have fallen short of expectation. Big recovery again in the stock price. It's almost undone most of its losses. But at 200 thereabouts, what's the call on the stock, right now?
Thanks for having me on the show, Aisha. Yes, I think I don't track Zomato so closely in terms of numbers, but yes, the recovery has been dramatic over the last 3-4 quarters. What we have seen is the body language and the commentary of the management has also drastically changed. And in fact, numbers also, revenue has been rising. We have seen discretionary consumption doing extremely well across sectors, across people who are traveling, across people who are sort of eating out and also ordering food. So I think this phenomenon is probably now getting into more a structural demand than and then sort of a pent-up demand, which people used to talk earlier 2 years back, post the completion of COVID. But yes, I think there are only a couple of players which are available over here, one Zomato and Swiggy. So probably yes, Zomato tends to benefit as the first listed player over here, and the numbers have been showing good traction. So as I say, I'm not got into the detail of the numbers, but on the face of it, yes, looks a confident management and decent numbers.
Point taken, confident management. I'm not sure if we do have Vinny with us to talk to us a bit more about details of the numbers. Vinny, take it away. What are the highlights that you have spotted?
So yes, firstly, let's just talk about the Blinkit EBIT. That's turned positive. Blinkit has now become adjusted EBITDA positive as well. And I'm just reading the shareholders letter right now, and they start also with talking about the quick commerce segment. So clearly, the quick commerce, which has started seeing a good growth, that seems like it's continued. And they've given a guidance of Q1 FY25 first for turning EBIT positive here. Now they've turned EBIT positive. The EBIT for quick commerce is currently at around 2 crores versus the loss of 56 crores. Other than that, revenues are in line. Food delivery, I think that's a bit of a subduedness as we're seeing in terms of the growth on a quarter-on-quarter basis, 2% growth. And our expectation was much higher than that, somewhere in the high single digit is what our expectation was. So yes, a slight bit of a miss that one would say, at least on the food delivery growth front. Other than that, Blinkit has managed to continue to see a strong growth, 19% growth versus our expectation of 18%. So in line with what we were expecting. Hyperpure business also we were expecting around a 10% growth. That's what it's coming at. So yes, that's what it's looking like. Other than that, overall EBITDA also, the company is saying that they plan to maintain these levels in terms of the positivity on the EBITDA front. They're saying that they're planning to open around 1,000 stores in Blinkit by FY25. So that is interesting that we are keeping an eye out on. But clearly the stock has recovered from the low point. It was down almost 5-6% at one point of time once the results came in. But do not forget, quick commerce turning EBIT positive. They're focusing a lot more in terms of expansion there. 1,000 stores in FY25 itself is something that is interesting to watch out for. But so far, these are the details that have come in. We'll keep you updated with more of the details once I'm done reading with the shareholders letter.
Thanks so much for quickly getting us those details from the shareholders letter. The stock has pretty much recovered all the lost ground, down just about 1.25%. The fact that they're talking about the break-even of the Blinkit business in March itself, and in a steady state, they're expecting the margins to be 4 to 5%. The expansion plan is also quite rapid. They are expecting to add almost 1,000 stores in FY25, and the Hyperpure losses have also come down meaningfully, and all of this is auguring well for the stock price right now. But that was the entire thesis around Zomato. The stock has run up quite a bit. But the other pocket that we're watching out for, and we heard the management commentary from ABB as well. But actually, before that, Devang, what about UPL? That stock has run up over 20-25% in a matter of 3 days, and the earnings are more or less a beat versus expectation.
I think yes, what we have seen is also a lot of sectors which earlier were sort of laggards have also come back to the fore, and there's more of sector rotation. While the market consolidates or corrects a bit after this fast and furious rally, we have seen a lot of such sectors coming back and performing very well. This business had sort of suffered over the last couple of years, not delivering great numbers. But yes, this time also probably people are talking about normal monsoon and Enlilo getting transferred to La Nina. So I think this types of noise probably is making the stocks also sort of do well. And some of these businesses, for example, PI Industries, UPL, all this had underperformed, and now they are again coming back and doing very well. So I don't read much into it, but yes, if the numbers are better for these companies who underperformed over the last couple of years, there will be upside to such companies. And then also contradictorily, a lot of companies who have sort of behaved ahead of estimates of numbers are also falling because they are not falling on the expectations which were sort of built into the business.
But that's not quite the case, Devang, with Tata Motors, especially for the elevated levels the stock was quoting it at. Definitely them, talking about a muted JLR guidance, that's really soured sentiment on the street. It's a deep 8.5% crack that you're seeing. What do you think is in store for the next few quarters for Tata Motors?
I think clearly what we feel is that the stock was sort of fully priced in. I think whatever the management comments I was reading about, there is nothing negative as such on the Tata Motors front, not even on the JLR front. Even the India business, the EV business is sort of doing well. But the negative sentiment is around there is a global slowdown in demand of cars, if that is going to hurt the case, which I was reading in the morning as well, in a sort of news articles as well, that there is a global slowdown which is awaiting this industry. There is also somewhere down the line, maybe the CV cycle in India over the next 6 months, 9 months can go into a bit of hibernation. So I think these are certain reasons wherein if you are fully priced in, if you've done extremely well over the last 3-4 years, there is probably a case where you correct a bit, and again it's not that you will sort of get into an eternal correction. It will you gain more strength, and from here on there will be new investors who will be wanting to enter. But yes, to be very fair, a lot of companies are now fully priced in, and there will be some correction if you disappoint a little bit, or if even the sector disappoints you by a bit.
Okay, point taken. So that's the view coming in on Tata Motors. In the meantime, Devang, we'll let you go. Thanks so much for making time and speaking with us for that quick chat about taking the BTST calls from our technical experts. Naresh, is it BTST, STBT? What are you doing on this bounce now?
So it's a BTST strong recovery. So first is the buy on Tata Steel, which has bounced back from an important area. Stop loss at 160, target price of 170. Second is a buy on L&T, given the correction, as well as the recovery in the rest of the capital good names. This could also make a bounce back. Stop loss at 32.80, target price of 33.60.
Okay, Kunal, what's on your list?
So 2 buy calls, and the first one is on AB Capital. The stock coming back into a breakout mode about 220 mark. So would suggest a target of 232. Stop loss could be now trailed to 214 approximately. And BHEL is the other stock, is forming a bullish hammer pattern on the daily charts after a 10% correction in the last 1 week from 300 odd to 270 approximately. The stock is looking attractive. So BHEL is the other stock, 300 as a target, stop us at 270.
By the way, the index has come off from where we were earlier at. So we're closing in just mildly positive. But yes, from the session lows, it's quite a meaningful recovery that we've seen. 74 points up in the green is how we're shutting shop for the day as we speak right now. The pressure points, of course, Bharti ahead of its numbers tomorrow. The Tata Motors, which has really been hammered today. Indices Bank is closing in flat. ITC has had no participation. M&M, even though it's recovered a little bit, but that's kind of still, closing in flat for the day. And so is the case with Maruti as well.
But yeah, there is a lot of commentary coming in from the political arena on the markets and the volatility that we have seen. Quickly, let's listen to a bite coming in from the Minister of External Affairs.
I can only tell you this, that, usually, a lot of us in the government, we have hesitation of getting into the markets. But other members of my family tell me that pretty much a lot of what my parents or my grandparents handed over to them have done very well in the last 10 years. So if they've done well in the last 10 years, imagine what awaits you in the 25.
Okay, so that's the view coming in from the entire political setup. They are very confident of the kind of win BJP and NDA is going to happen. Let's see which side it really goes. But for now, the market is going towards the side of the bulls clearly. It's been a very sharp recovery that we have at our hands. At least by the end of the trading session, the Nifty is up almost 300 points from day's low. Bank Nifty has recovered almost 700 to 800 points. And I have to say that, of course, recovery has been led by a few large caps as well. Those names will come up for you on the screen as well. I think Reliance was one of the laggards in the trading session, but HDFC Bank, ICICI Bank, these were the top gainers. Even the advanced decline ratio is still tilting towards the declines a bit. I think overall it's just the sentiment which has turned quite a bit. India VIX, let's see where it's going home. Is it above the 20 mark at the end of the trading session or not? Yes, continues to be up around that 11% mark. And then those individual names, the likes of ABB, Siemens of the world, Indegene, which was the latest listing on the bourses, opened with a price band of over 600 bucks, just around that 570 mark right now. Hindustan Zinc is higher by 9%. UPL, which is a result reaction, is up 7%. Dr. Lal PathLabs saw good traction after its earnings were a beat versus expectation, and we saw the brokerage upgrades come by. Sirma SGS, not really that much. The stock is actually down 16%. The management is confident of a 40-45% growth with the EBITDA margin profile of 7%, but the street has given it a thumbs down. Thumbs down it is for Tata Motors as well, that 9% cut. And Bank of India has also managed not to really infuse the confidence in the market right now. That stock down 10%. Even Jana Small Finance Bank, eClerx, Senco, Vijaya Diagnostic, these were some of the other big losers in the trading session, while BEML held out. You also had names like Cipla that continued the up move from Friday as well, and then Zomato, which was an earnings reaction, volatile throughout the day and was going a bit weak into the earnings, went down as much as 6%, but from there has recovered and going home with losses of around 2.5%. So overall, it's been a okay kind of day. I think what we should really take heart from, Aisha, is the fact that we saw a big recovery on Friday, and that recovery continued into today as well. Let's see what tomorrow holds.
Yeah, absolutely. And today, of course, the star performer other than ABB, which has really pushed up along with Siemens, the cap goods sector, has really been pharma and healthcare all through and through. Lal PathLabs, Cipla, Piramal Pharma, Metropolis, Lupin, Oro Pharma, Divi's. That's where all the stars have been. But on that note, we're going to wind it up on this edition of Closing Trades. Thanks for watching.